What's up everyone, it's Karthik with Moneyvest. So in this video, we are going to be talking about Tesla stock. Here's going to be a complete update on this company. We were live for over 3 hours yesterday going over the entire earnings report and also talking in detail the progress Tesla has made over the last quarter here. And of course, looking into the earnings call for Tesla as well. The stock is now up almost 13% pre-market, trading up to $240 and back up to those levels. We see a little bit of a pullback pre-market, then of course recovering back up to now almost up 13% as of the time of this recording, just hitting a pre-market high of just under $241 per share. So this is going to be your full update on the entire breakdown for what Tesla reported. We got a beat on EPS at 72 cents per share on a non-GAAP basis, and revenues being reported at just over $25 billion after a record quarter of deliveries at just under 465,000. Slight miss on the revenue, but of course a very strong beat on profitability where the margins have finally, in my opinion, have seen the lows, and now the best days of Tesla could very well be in the future. So as always, if you enjoy this video and find it helpful, make sure that you drop a like. I would really appreciate that. Subscribe to the channel, share this video with other Tesla investors, traders, your friends, family who don't know about the company, want to learn more. I would really appreciate that. It's recommendations like these that really help us grow our channel. So when it comes to profitability, again, that was the main reason, in my opinion, as one of the main reasons why Tesla saw such a significant inflow after the earnings release. $2.7 billion in GAAP operating income, $2.2 billion of GAAP net income, and over $2.5 billion of non-GAAP net income in the third quarter of 2024. Also pushing the net margins, the profitability margins, back up to almost 10%, coming down from 7%. So that's a 300 basis points or 3 percentage point increase on a quarter-over-quarter basis. Now, when it comes to operating cash flow, $6.3 billion. Free cash flow also jumping triple digits here, up to $2.7 billion. And one of my favorite things was of course, the cash balance for the company, despite investing so heavily in trading, compute, artificial intelligence, robotics, and all the investments that Tesla is making. They're still able to prop up their balance sheet by an additional 2.9, almost $3 billion to over $33 billion in cash. And I'll go over the balance sheet later in the video, but that is a very strong positioning for the company. Increased AI training compute by H100 GPUs by 75% in the third quarter in over 2 billion miles. So earlier this number was 1 billion. We have seen a doubling in that number. 2 billion miles driven cumulatively on FSD supervised as of third quarter, with more than 50% of that coming from the most latest version, which is the V12 FSD. Now, more importantly, the cost of goods sold. Now, this is really related to affordability of those vehicles. It's coming down to the lowest level ever at 35,100. So in order to continue accelerating the world's transition to sustainable energy, they understand, Tesla knows that we need to make EVs more affordable for everyone, and including making total cost of ownership per mile competitive with all forms of transport. Preparations remain underway for our offering of new vehicles, including more affordable models, right? So they're making the preparations to release more affordable models. This is exactly what we want to hear, because this is what's going to get Tesla just from this high-end luxury EV market to a very, very affordable electric vehicle market, accessible to many, many people in the world. And it's really going to explode in terms of those deliveries, right? Which Elon Musk also mentioned. They're expecting 20 to 30% increase in deliveries in 2025. We'll go over the comments from earnings call later in the video. But more affordable vehicles are coming in, which will begin launching, not production, not volume production, not, figuring out the idea, but launching in the first half of 2025. So we are literally just a few months away from having more affordable models. And me personally, I'm waiting for the 2025 more affordable models to come in, for the prices for 2024 used Tesla Model 3s to come down. So I'm actually planning on buying a Model 3 for myself 2024 next year, when the prices come down in the used market as well. So again, more affordable prices means more deliveries, more ownership of Tesla vehicles, and it's really just increasing their install base. And now we have over 7 million Teslas driving in the world, considering that Tesla achieved that milestone in the previous quarter. And more importantly, another big big area for Tesla's growth is the energy business, right? Achieving, now it's on track to doing almost $10 billion in revenue, and Tesla's on track to doing almost $100 billion of revenue this year, of which 10% is going to be coming from the energy business. So it's slowly and steadily becoming a bigger and bigger piece of the entire puzzle. So energy business achieved another strong quarter with a record gross margins at over 30%. Additionally, the Mega Factory and Lathrop produced 200 megapacks a week, and Powerwall deployments reached to a record for the second quarter in a row as we continue to ramp Powerwall 3 as well, which is their battery packs capable of a power output of well over 11 gigawatts. And again, the battery capacity also reaching 15 kilowatt hours with one Tesla Powerwall 3. And, this was actually one of the things that Enphase's Energy earnings call analysts were asking this very question. They were asking, what are you doing for the shares, for the market share loss to Tesla Powerwall 3? What is Enphase Energy doing with their IQ 5P battery packs when they're losing market share to Tesla Powerwall 3? This was one of the questions. So Tesla is seriously gaining a lot of market share in the energy market. And here are some of the numbers that I really wanted to go over. And look, we understand the revenues, 25.1 billion, very strong growth, 8% year over year, 20% gross profit increase. But it was really the margins that were the main telling story for Tesla, because we've been seeing the decline in margins for a really long time. 17.9 coming down to about 17.6, then coming down to 17.4, 18%, and now look at that jump. Highest margins in the last 4 quarters, almost 20% on a GAAP basis for gross margins, a little bit under 11% for operating margins. Again, the highest level that we've seen in the last 4 quarters. We essentially bottomed out in the first quarter 24. Tesla's obviously been one of the worst performing stocks because of these reasons, as profitability struggled. And then we did have the net income margins also jumping to almost 10% with $2.5 billion in net income, 8% increase year over year. And non-GAAP EPS was up 9% year over year, GAAP basis 17% increase on a year over year basis. And free cash flows also 2.7 billion, up 223% on a year over year basis as well. So in my opinion, I think really what Tesla's going through, financially speaking, is its Meta moment. I think it's really what the Meta moment is, where Meta was also investing heavily on a lot of these other projects and initiatives. And, investors obviously have written off Meta as a company when it was trading down to low $80 per share. And as a result, of course, it was selling off over 60-70%, right? It was down significantly from its all-time highs. And then in the future quarters, as the company was doing better in terms of that reacceleration of margins and profitability, and we saw that increase back up, everybody got excited again, and now Meta is one of the most overcrowded trades, right? A couple of years later, it's back up to over $600, hitting a new all-time high. So I think really financially speaking, Tesla's margins, price cuts that we witnessed, so many price cuts in 2023, and again earlier this year as well, really led to lower revenue numbers, higher COGS, resulting in lower margins. But that is all behind us now. I think we are still going to see more affordable prices, of course, for Tesla vehicles, as they've already planned for new affordable models in 2025, which is going to ramp up deliveries even further for Tesla. And if they're able to maintain those margins and accelerate them back up, I think that's going to be the Meta moment for Tesla to see that progression moving forward, because really that's really the key ingredient for analysts, right? For investors, institutional investors and big money, is increasing margins and increasing profitability on a year-over-year basis, right? Those two things, if you give them that, every stock is going to do really well. Cash and cash equivalents sitting at over $33 billion, and total liabilities are just under $50 billion. So again, propping up their balance sheet really well. Energy business achieved the record gross margins of over 30%, sequential increase of almost 6%, despite lower megapack volumes. And this right here is the gross profit. You can see every single quarter, very nice increase, and also the energy storage deployment with Powerwall 3 also coming in very strong. We're seeing very nice increases. And this is probably one of my favorite slides, is because FSD V12 increasing 50% of that miles driven on supervised FSD, and now it's got over 2 billion miles worth of data. Not only it's got the most data, it's also got the most AI training capacity in terms of its H100 equivalent GPUs, and that's also been increasing substantially. So in Q3, we released the 12.5 series FSD supervised with improved safety and comfort thanks to increased data and training compute, 5 times increase in the parameter count and other architectural choices that we plan to continue scaling in Q4. And in the earnings call, they also mentioned that V13 is going to be coming out very soon, which is going to see a 5 to 6 times improvement in miles per intervention for full self-driving. And of course, we've got some other updates, which I'm going to go over now. So much of the auto industry is in major declines. That's what Elon Musk mentioned at the beginning of the call, saying that no other EV company or EV division or any other EV company division or anything is profitable. And Tesla being profitable with almost 10% net income margin is a very, very difficult thing to do. And I think it's really underappreciated from his standpoint how excruciatingly difficult this is to achieve. He also mentioned that cost reductions, on the other hand, making cars more affordable, is also very, very challenging. There should actually be a superhero movie. They were joking about it, that it should be a movie about a person if they can reduce cost by 20%. So reducing 20% in cost from a car is incredibly challenging, right? And they're focusing on that. They're trying to reduce it as much as possible while also passing over those savings to the consumer, thereby keeping their margins either flat or increasing just a little bit, right? More affordable models on track to production in the first half of 2025. We got Tesla could see 20 to 30% growth in vehicle deliveries in 2025, excluding external events. This is also something he mentioned. And then finally, of course, Cybercab volume production in 2026. This is also something that many people wanted to hear. And the keyword is volume, because they're not getting started. They're not producing them in small numbers. Volume production meaning they're going to be doing thousands of Cybercab productions in 2026, which again is just over a year away. We got a target of 2 million Cybercab deliveries per year. That's essentially what they're targeting at $25,000 cost, as we talked about it during our Robotaxi event, which is the October 10th event. 4680 cell rapidly approaching most competitive cost in North America as well. And V13 to be launched soon. As I said earlier, 5 to 6 improvements in miles per intervention, and already seeing a 100x improvement in FSD for the year in 2024. And essentially what they've built is the end-to-end neural network of one full stack, is what Elon Musk said, for FSD for highways, streets, and parking lots with ASS, which is the Actually Smart Summon, and expecting to roll out unsupervised FSD in California and Texas in 2025, just awaiting regulatory approvals, which Elon Musk said shouldn't be an issue. They should be very comfortable. Of course, California being the first state because they've got the most data in that particular state. Optimus could be the most valuable product for Tesla, is what he mentioned, and Tesla remains the only company with the ability to produce, scale, and train autonomous vehicles, robots, energy deployment, all the things renewable, and to a robotics, AI future, energy and transport future, right? Because the keywords here are not just production and getting to market. It's also scalability, it's also cost, and it's also training. So there's a lot of factors at play when you are doing so many things at once, right? When you've got so many complicated projects going on, that we tend to forget how difficult it is to do all those things. You can make a case that Waymo is already first to market, and Elon Musk even took a stab at Waymo during the call. But you can make a case that, okay, Waymo is first to market, but what about scalability? What about training? What about the cost, right? There's a lot of things there that are the nuances that what make Tesla so incredibly powerful idea for the long term. Now, granted, this all needs to be executed, right? So that's what Elon Musk pretty much said at the end, is that if we execute, Tesla could be the most valuable company on earth by a long shot. So the keyword here is execute, right? And I've mentioned this before in my Tesla videos, two things, execution and adoption, right? Both of those things need to line up perfectly in order for Tesla to do really well over the long term. There needs to be a market for this, whatever they're building. So in other words, adoption, and Tesla needs to be the one executing on it. So adoption and execution makes Tesla, in my opinion, one of the greatest ideas for our future moving forward. But if there is adoption, but Tesla's not the company executing it, there's going to be opportunity elsewhere. But if Tesla's executing it, but there's no adoption for the products they're building, like for example, if there's no need for the Optimus robot, then they're executing for nobody, right? And then the company fails. So execution and adoption goes hand in hand. And if there was one company that I would bet on robotics and AI and autonomous vehicles, it would be Tesla. So that's kind of like the entire take on the company here. Up over 13% now. Trading back up to almost 242. So let me know your thoughts down in the comment section below. And what are you thinking? What are your thoughts from the earnings call? But yeah, that's the entire update. Let me know your thoughts down in the comment section below. Very nice move to the upside, pushing up over 13% to almost $242. So congratulations to all Tesla shareholders, investors. Super excited for all of you. Make sure that you drop a like, subscribe. Link's going to be down below if you want to join. Of course, be a part of our MoneyVest community. There's a few more spots left if you're interested in joining us. Get access to all the website features, trade alerts, options portfolio, members only videos, Discord. Everything's going to be available with the link down below. As always, happy investing. I'll see you all in the next video.